So, welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, we have gold's daily chart. However, before we have a look at gold, I'm going to be moving mostly within FX pairs. We're going to be mixing technicals with fundamentals. Now, the first big technical issue with Euro USD's daily chart, as you can see it in front of your screens right now, we are talking about the possibility of an M formation. And at this point, I would be noting that we have the first upward movement. We had a correction lower. Neckline being set at 1.10. And the downward trend line, which seems to be in the works. The big question is whether the downward motion has been interrupted or not. If not, then given that the neckline has been broken off the information, we may be seeing a substantial sinking of the pair on a technical basis, as it could breach the 1.0915 and start aiming for the 1.0790. On the other hand, though, we may be seeing that the downward motion of the pair has been interrupted. I think that the next 2 days are going to be critical about the direction of the pair. And should the stabilization be maintained, possibly between the 1.10 and the 1.0915, we may be seeing the double top formation being cancelled. On the other hand, should the bears regain control, as they did during today's Asian and early European session, possibly be enhanced, we may see the pair aiming for the S1 or 1.0915 and start aiming for the 1.0790. Mind you that on the fundamental level, we have a number of ECB policymakers which are scheduled to speak. I wouldn't be surprised to see calls for another rate cut being reiterated by ECB policymakers, which could weigh on the euro somewhat, as more or less the expectations for a rate cut by the ECB in its next meeting could be enhanced. I would be highlighting also that we have a number of Fed policymakers which are scheduled to speak today, and should they more or less remain in line with the script of Fed Chairman Powell's speech last week on Monday, we may see more or less a more bullish USD prevailing, as there was some hesitation about another double rate cut. May I also remind you guys here that the market's expectations for another double rate cut were practically raised in the past week, especially after the release of the US employment report for September, which came in higher than expected on Friday. Now, the next big test for the USD is expected to be the release of the US CPI rates for September that we are tomorrow. I'm highlighting here both the core and the headline rates and the possible resilience of the CPI rates or failure to slow down would be highlighting a resilience of inflationary pressures within the US economy, implying that, or if you prefer, certifying that the Fed's going to have to maintain a moderated rate cutting path. Before that, though, I'm highlighting the release of the Fed's meeting minutes. They are in the mid to late American session today. And the big question here is about the tone of the decision. Now, the document as such is expected to be scrutinized by analysts and market participants alike for any signals regarding the bank's intentions and exactly how dovish is the Fed. Fed policymakers, with their comments, which will be included in the document, may provide more clues regarding the Fed's intentions. And should we see more Fed policymakers actually expressing concerns about extensive rate cuts, show some hesitation towards extensive rate cuts, or even show a preference towards a more moderated rate cutting path, then we may see the USD gaining substantial ground, which could weigh on Euro USD. forcing it below the S1 on a fundamental basis. Now, for the pair to maintain a bearish outlook, we would require to breach below the S1. That was a level which provided support here, but also resistance here, so it was tested on both sides of the aisle. For the time being, I would be noting that we see a sideways motion of the pair prevailing, but we have some slight bearish tendencies, which are also being indicated by the RSI indicator, which remains below the reading of 50, above 30, but still quite low, implying a bearish predisposition of the market for the pair, which could drive it lower. For a bullish outlook, the bar is very high, but it's a possibility and should be covered. For a bullish outlook, we would require the pair to breach above the 1.10 resistance line and start aiming for the 1.1110. Let's have a look at cable. By the way, should you want to see any other trading instruments you would be interested in, let us know in the comment section. If we have time today, we can do them today. If not, we can always have a look tomorrow. Now, this is USD JPY's daily chart. Okay, there has been a stabilization that's reflecting mostly a wait-and-see position on behalf of the market for the US dollar. I would be noting some slight bullish tendencies during today's Asian early European session. However, in my opinion, they're still a bit unconvincing. On the other hand, you have the RSI indicator, which is on the rise. So once again, bullish outlook in place. Ooh, it's going to be a close one. So for bullish outlook to emerge, I would require the pair to breach the 149.35. On the other hand, we have to note here that the upward trend line, which was initiated at the beginning of October, is still intact. So we may be seeing a wait-and-see position here as well. And it's understandable that the stabilization of the pair may have also occurred given that the price action had repeatedly broken the upper Bollinger Band, forcing it now to stabilize somewhat. Yet should the bullish outlook be rejuvenated, I wouldn't be surprised to see the price action breaching above the R1 and start aiming for the R2. On the flip side, should the bears take over, I would require the pair to drop, break initially the pre-mentioned upward trend line, in my opinion, in the first signal that the upward motion has been interrupted. But that's not enough for bearish outlook. For bearish outlook, the pair has to breach also the S146.85 and start aiming for the S243.45. Allow me to readjust slightly, make the labels a little bit more visible. On the fundamental level, I'm focusing on the JPY side of the pair on the BOJ. Now, okay, one could also mention on a fundamental basis the possible safe haven flows for the Japanese currency, given its dual nature as a national currency on the one hand and a safe haven on an international market. But I think the main driver may be BOJ stance. And we have BOJ policymakers which will be speaking during tomorrow's European session. That would be interesting in my opinion. The big issue is that there was an effort by BOJ to actually normalize its monetary policy. However, that effort is finding headwinds by the Japanese government, and that rejuvenated bearish tendencies practically for the JPY side of the pair. So that would be translated into bullish tendencies for USD JPY. Okay, let's have a look now for GBP USD cable. Also some hesitation. The pair is also looking for direction in a relative stabilization. It's testing right now the downward trend line. For for bearish outlook, I would require the pair to breach the S1 1.3030 and start aiming for the S2 1.2890. On the flip side, should the bulls take over, or let me rephrase that, for bullish outlook, the bar is again high. The price action has to breach the pre-mentioned downward trend line, which is currently testing, but also breach the R1 1.3260 and start aiming for the 1.3435. I know it's a little bit conservative, playing it on the safe side. That's my style. Let's move now to USD CAD. Now, USD CAD, as the rest of the commodity currencies, we continue to see a relative strengthening of the USD, while at the same time a weakening of the commodity currency, whether that may be the Canadian dollar, the Aussie, or the Kiwi. So the loonie weakened yesterday, and during today's Asian session, the bullish outlook is present. I have also to note here that the RSI indicator is pretty high. Let's have a look how high. It's at 62.5. That implies, I wouldn't say strong, but a substantial bullish sentiment among market participants for the pair. I have two worries about this pair. The first is the steepness of the upward movement, which we can see on this upward trend line. The second is the fact that the price action is now testing the upper Bollinger Band. Both may imply that the bulls may be overreaching it and the pair may be ripe for a correction lower. For the time being, though, the outlook remains bullish as long as the upward trend line we have just shown remains intact. I would expect the price action to aim, if not reach, the 1.3720 resistance line. While for bearish outlook, I would require the pair to drop, breach the pre-mentioned upward trend line, breach the S1 1.3610 and start aiming for the S2. Let's have a look at the Aussie, which should be falling. And ladies and gentlemen, it does. But there is a distinction here. And the distinction has to do with the fact that the bears seem to be a bit tired. You can see how, albeit it would be more obvious if we drilled into the 1 hour chart. Allow me to switch. This is it. Now, you can see how the price action has been moving in a downward motion. That's clear. But yesterday we had a trough, and today's trough is a bit higher. And also you can see how the pair has stabilized just above the 0.6705 support line. It's as if AUD USD, I wouldn't say has hit a floor, but definitely is finding some difficulty to progress even lower. So back to the daily chart. For the time being, we tend to maintain our bearish outlook for the pair. The RSI indicator, which has dropped below the reading of 50, also tends to agree with such an outlook. But I would be issuing a slight warning here that the bears may be a little bit tired. On the flip side, I would say that the Aussie may be gaining some ground. Let's have a look at the Kiwi. We had an interest rate decision by RBNZ, the Central Bank of New Zealand, during today's Asian session. Now, NZD USD continued to fall during today's Asian session, breaking the 0.6105 support line. Now we have to turn this into a resistance line. That's clear. Now, in its interest rate decision, RBNZ cut rates as expected by 50 basis points. That was more or less within market expectations. That was no major issue. Uh, for the time being, I'm placing this support line on this chart here. And I would say that overall the tone of the accompanying statement was more tilting towards the dovish side. It's characteristic that, sorry, give me a sec. $9.40. It's characteristic that the bank views the current level of the official cash rate as being restrictive enough, and should there be no surprises, I think it's planning on cutting rates further. So that was, in my opinion, a clearly dovish inclination on behalf of the bank. It's characteristic that the market now increasingly prices in another double rate cut in the end of November meeting. So more or less, I would expect the monetary policy outlook as expressed by RB and Z to continue to weigh on the Kiwi, which could allow NZD-USD to fall further. Now, reversing to the support lines, setting the S1 at 0.6045, the S2 at 0.5980, and the S3 at 0.5940. Locking everything in. As with the Aussie, also with the Kiwi, China's intentions tend to play a substantial part. And now regarding China, I would be noting that arguments that the already announced stimulus by the Chinese government and PBOC may not be enough to revive the Chinese manufacturing sector tends to gain traction in the market, and as such tends to weigh on the Aussie and the Kiwi given the close economic ties between New Zealand's and China's economy as the Australian and the Chinese economy. On a technical level, the outlook remains clearly bearish. At this point, I would like to draw a downward trend line showing the limitations of the downward movement. And here you go. I would be highlighting here the fact that the price action is in downward motion. The downward trend line, exactly implies a continuance of the bearish outlook. Also, the RSI indicator, which continues to fall, it's currently reached the 37.56 reading, so that's pretty low. All of that tends to imply a continuance of the bearish outlook for the pair. On the flip side, one small word of caution: the price action in its drop has hit the lower Bollinger Band, which may slow down the bear somewhat, or even cause a correction higher. So I would be cautiously bearish on this pair. Okay, let's have a look at US stock markets. Actually, before that, let's have a look at gold. Now, gold's price fell yesterday and slightly during today's Asian session. Let's drill into the 4-hour chart. That's better. Now, this is the 4-hour chart. You can see how the pair dropped, yet was shy to actually breach the S2 2600. At this point, I would like to reposition the support line a bit higher. The S3 at 2550. Let's lock this in. Definitely the S1, given that it has been broken, we're turning it into a resistance line. Let's go hunting for a new ultimate support line. Now one could go as low as this, however, I do consider that there is a mid-level, and I'm placing it here. You can see how here the level provides support, while on the flip side it provides resistance as well. Looking at the chart, going further back. Okay. Readjusting it. In green, that would be the 2500. 2505. Yeah, that's better. Now the R3 is being placed at 2730. The R2 at 2680. The R1 at 2633. The S1 at 2600. The S2 at 2550. And the S3 at 2505. On the one hand, we tend to maintain a bearish outlook for the pair, given that the price action has been forming lower truths. Also note how the RSI indicator is below the reading of 50. It's actually at 36.1, also implying a bearish predisposition of the market for the precious metal. So should the bears maintain control, they would have to go through the 2600 support line and start aiming for the 2550. On the other hand, note how the price action actually breached the lower Bollinger Band yesterday and stabilized somewhat during today's Asian and European session, so that may imply a temporary stabilization between the R1 and the S1. For a bullish outlook, okay, for the time being, a bullish outlook seems a bit remote, but it could occur, and in that case, we may see the price action breaching the R1 2633 and start aiming for the R2 2680. Okay, let's have a look at US stock markets. But before that, let's have a look also at WTI, because it dropped yesterday. There you go, it was a wide drop. And the interesting element about this drop is the fact that the upward trend line was broken. And that forces us to switch our bullish outlook in favor of a sideways motion initially. Note how the RSI indicator dropped and has neared the reading of 50. It's actually at 55, it rose back up again. But overall, there seems to be some fatigue on behalf of gold bulls, and I would expect it for the time being to maintain a sideways motion between the S1 and the R1. It's characteristic of the validity of the R1, how the level more or less stopped yesterday's ascent and actually turned the bullish movement of the past 7 days into a bearish correction. Should the bulls renew their control over over black gold's price, over WTI, we may see it able to breach the 77.85 resistance line, form practically a higher peak than yesterday's. And thus, next possible target for the bulls may be set at the 83.85 resistance level. Should the bears once again clearly take over, or the selling interest of yesterday be extended. Expect WTI's price to breach the 71.40 support line and start aiming for the S2 6460, a level which marked the reversal of the downward motion around the midst of September. Last but not least, we still have time for a quick peek at S&P 500, and I'm highlighting this because, let's have a look at Dow Jones. Okay, definitely have to find it and upload it again. Now this is Dow Jones 500. There you go. Daily chart. Now, the interesting element here is practically the fact that the price action of Dow Jones was on the rise yesterday. That's something which was a bit unexpected, as the price action was expected to drop. However, I would be noting that it remained in a sideways motion, and that's very, very characteristic. Note that the support line of yesterday, which was also a couple of days before, was also prior resistance line. That's pretty valid. While on the top side, we have a resistance level at 57.80. We're talking always about S&P 500. And I'm highlighting this chart because the index is about to reach new record highs. But to do that, it has to breach above the 57.80, and that could allow for the bullishness of the market to be expressed substantially. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Okay, shall we start? Again, welcome everyone. So today's topic, I'm going to talk about Gulfi multiple moving average strategies. Okay, just before we start the session, I just want to highlight risk warning over here. Okay, anything in this video is educational in nature. Nothing should be construed as investment or trading advice. If you want to trade, please do your own due diligence with the guide trade. Okay, and maybe disclaimer here. Just mention maybe just want to highlight risk warning over here. As we already know, trading, forex, and CFD may carry significant risk to your capital, and it may not suitable for all investors. So please come and join the webinar and learn together. Okay. The speaker today, my name is Peggy. I'm an investment analyst and a prop trader as well. These some of the certificate that have passed all the challenge. If you guys want to know about the prop firm, you may just Google it, all right? So just a quick one. So basically how you get all certificate, which is you need to pass all the challenge. Phase 1, phase 2, which is phase 1, 8% profit target, and phase 2, they have like 5% profit target, and they have like 5% maximum daily drawdown. All right, just quickly like info for all the prop firm. And as you know, today I'm going to cover which is what is the coffee multiple moving average strategy. Okay, how to get the entry and the exit criteria, and how can you improve on it. Okay. So what is a multiple moving average strategy, or maybe short form I just say GMMA for the short form for coffee multiple moving average. Okay, strategy is a trading technique developed by Daily Coffee. It utilizes the multiple moving average to analyze the market and identify trends. The strategy used two groups of moving averages just to represent short-term and long-term market sentiment. Okay, and this is how it look like. Okay, the GMMA. Okay, I'll bring you guys to the maybe the chart later and how we're going to implement this indicator. Okay, so actually it consists of two of moving averages for the past 3, 5, 8, 10, 12, and 15. This for the short term. Okay, and those moving averages represent the behavior and sentiment of short-term traders. Okay, so the moving average 3, 5, 8, 10, 12, and 15 day, which is the green color, which is over here. Okay. And for the long term, moving average consists with the path 30, 35, 40, 45, 50, and 60 days. Moving averages represent the behavior and sentiment for the long-term investor, which is the red color, which is this one. Okay. And how we're going to use it in the chart. Okay, so you can use GMMA to identify trend. So basically, when the short-term moving average is above the long-term moving averages, which is when, okay, the green one, which is a short moving average, go above the red color. Actually, there's a long that would be call up that will go for wait, okay, that will be identified for the uptrend. So when they close, we will gonna buy over here. So basically for the okay, when the short term moving average is above the long term, which is when green above red, okay, and both group are separated with a clear gap. So basically when the green go above the red, and you can see really clear a gap here, is indicated a strong uptrend. You can see that when there's a gap between the green and the red color line, we already know that it's strong uptrend. When the short-term moving averages are below the long-term, which is when green cross below the red color one, and then you can see there is the gap here. Okay, it indicates a strong downtrend basically. Okay, so how are we going to get a entry and exit signals? Okay, for the buy signal is generated by the short-term moving averages close above the long-term moving averages. Okay, for the sell signal is generated when the short-term moving averages close below the long-term moving averages. So basically this is how I just mentioned. You can see that, okay, for the enter, Okay, this is a buy signal. You can see that when the short term, which is the green color, cross above the long term, which is the red color, we're going to enter over here. And circle over here, meaning that this is acting at the support level, meaning that this is our maybe buy entry. When the price pull back here, is acting at a support. Either you want to get another buy entry over here, buy entry over here, buy entry over here, buy entry over here. Okay, and we're going to exit our buy position, for example, for this pictures when the short term close below the long term, which is green, close below the red color one here. Okay, we will exit the buy position because in this case we're going acting at the resistance level. Okay, when price go above, pull back, it acting at support level. For in this case, it acting at the resistance level. Okay. The setting to use, which is already just mentioned for the short term, we use EMA typically set at 3, 5, 8, 10, 12, and 15 periods, which is like the previous days. Okay, for the short term EMA typically set at 30, 35, 40, 45, 50, and 60. Okay, and you can see that when close above here, we're gonna buy. Okay, and then you hold a position. This is how it look like. Okay. GMA track the two activity of two major group in the market. Okay, for the short term, usually a trader like we are the retail trader. Okay, investors could be like bank or any like swing trader. They like to hold like the position longer. Okay, for the trader, we will track at the like the green color one here. Okay, and okay, for the trader, little trader, we will use the short term, which is 3, 5, 8, 10, 12, and 13 moving averages. Okay, like all we have we trade, for example, we already see that price is go below the GMMA, right? Like go below, it's only acting at the resistance. Either here you short and then you short from this one, either you close as like you at this level, but in this case what you can see here is acting the resistance level. This is go up to until the investor or those like bank or institution for the red color one. Okay, by the way, you have any question, you can let me know as well. For the investor or those like bank or big institution, you can see that they are used longer term, which is they are using 30, 35, 40, 45, 50, and 60 EMA. Okay. Don't worry, after that we bring you guys to the trading view and we're going to implement this and practice together. Okay. And finding trend. Okay. What you can see here, the trading plan, like I said, I got maybe two type of trader, short term, either swing, day trade, investor. That could be the like could be swing trader or position trader, or those like back intuition. They like to use like the longer EMA right here. And then, oh, how are we going to identify trend? Basically, we already know one price, meaning that the green color one, which is a short term moving averages, close below the red one, which is the long term moving averages, right? You can see the price on downtrend, basically because price falling, pull back to the GMMA, and then what is it, revert and then continue to the downtrend. When price go below the GMMA, we know that it's going to form uptrend to downtrend. Okay, when price close above, okay, the GMMA or the long term, which is the green one, short term close above the red one, we know that price changing from downtrend to uptrend. Okay, maybe let me just go one more slide and then we'll show you the opportunity. Okay, well, strong trend trading opportunity. We already said that price direction supported by both short term and long term. Okay, this is just the same one. Let me just show you in the chart over here. Okay, let's just go over to the trading wheel. Okay, Okay, in a trading view, you just go to indicator here. Okay, you just go to GMMA, which is short firm. I pick the first one. Okay, you can see that a lot of traders are using this only like 4,900 like user here. Okay, you can just go and implement. Just click. It will look like this. I use default setting, which is just the same in the slide. I just like over here, these are the short term and the red one for the long term. Okay, and the number of the setting is the same over here, which is 3, 5, 8, 10, 12, 15, 30, 15 for the short term. And for the long term, they're using 30, 35, 40, 45, 50, and 60 period. Okay, and how are you going to use this, which I just mentioned. Okay, you see really clearly that one. Okay, short term, I will just mention one green, okay, is a short term cross above the red one, which is a long term GMMA, which is over here, right? You're gonna buy one price cross above. Yeah, we buy here, right? And you can see that price go and this one pull back to the short term, which is acting in the support level. And again, it pull back to long term here. Okay, and then this is a strong uptrend. Why strong uptrend? Because you can see that one both short term and long term, okay, they like separated and have a gap. This is really strong uptrend. You can see that this is really strong uptrend. Okay, and we enter the buy position here, and we're going to exit when the price, when like the red one, the green one like close below. Now it's gonna closing. So basically we see like that. Okay. Because now we in head 4 time frame, right? Over here, we know that there may be a divergence here. Okay. You can see that we're going to exit when price, starting like close below here. And of course, now price already break below this support level. If you know how to look at us, like, support resistance, it used to be our support, now is become our resistance level. So either you exit when you see the price, it seem like make a price action here or make a divergence here, or seem like the short-term moving average is like like close below here. Either you exit here or you exit at this level, meaning that if you have the entry seen from like this entry, we're gonna buy up, and you exit at this level. We go for the long position here. Okay, and we target and we exit at this like level because price is falling, and that's similar close. We put there, and we going to put the Excel here. You can see that the RR, risk and reward, is almost like 4. I mean, let's just say 4, or maybe like more than 3, 1 to 3. Okay, so you can use this for like swing. If you're a swing trader, you can use GMMA for identify trend. And now we are gonna short. Okay, I already short the GBP because price already break below my kind of support level here. Okay, this is very strong. And there is a divergence here versus the I side. It is I side here. You can see that. Okay. Price make high indicator is make a lower high. So there's a divergence here. Either you use this one, you hold your buy position until you see kind of like the divergence here, bearish divergence, or you see the price action, and then you exit your buy position and then you sell. Okay. And this is an example in head 4. What's about even we're gonna use GMMA on gold, okay, USD. Okay, you can see that. And another one, when the price is sideways or ranging. Okay, what you can see now, one price is ranging here. You can see that the GMMA is kind of like where's my, okay, it's like they look like narrow here, right? You can see that it's close the candle here, and then you can see that the line is just close to each other here. So in the price ranging, you can see that's right. And we already monitor that. Okay, it seems like here you want to trade, definitely we know that this is our support level. Either you buy here already, and then you can see that you buy here and then see the price kind of like close above, the green one close above the red one, which is a short-term close above the long-term. Okay, we might have another buy order over here and then you hold. Okay, and you hold, even though let's say you hold here, you buy here, pull back here now, it acting at the support level. In this case, like you can see here, like you can see the rejection here, right? This is acting at the support level. And it go to here, the long-term one, and then after they bounce off and continue to go uptrend until here. If you know how to look at candle, look at the candle, you know that this is like the rejection over here, and then to me, when I want to exit, I don't have to wait until like short-term close below the red one, because you may only form like you earn a lot, become you earn later, little, because over here you can see that at this candle they close with the belly engulfing candle. In this case, able to hold my buy position, I'm using the trailing stop loss, up to here, and price is for close with belly engulfing with a lot of rejection over here. So meaning that to me, I will exit my buy position because price reach changing momentum from uptrend to downtrend. And what you can see here, one price close with belly engulfing candle, and this one it can about this kind of about up here. Okay, from here they go back to where, and then end up with another price action over here, and then you can sell. Okay, either here pull back here, you sell. Why we sell here? Because you can go to the H1. In H1, price is closing with price action. We will just zoom to see this is our price action, and over here is, I don't know whether you guys joined my webinar yesterday. Yesterday, I think we shot GBP and we shot GBP, right? Again, you can see that this is our, either you call supply zone or you identify your bearish order block. Same meaning. Bearish order block, you can see price falling and bounce off from the support level here, and then we gonna short at this candle because in H1 price go to like bearish order block, and we have price action here. Okay, from buy position here we close and then we sell. Again, you can see that now the short term it closed below the long term moving averages, which is green, closed below red color, and they really strong downtrend because what you can see here, there is a gap between short term and a long term, right? And then you hold until where you just hold. Okay, if you don't know where close, like where to close profit, either you close at a support level, or you can close when the green, something like that, the green close above the red one, meaning end of the downtrend. Okay, and then you close. But now you can either you short from here, you can use the trailing stop loss, like maybe you you like your stop loss, and then you use like a move every like 10 pip. Okay, to lock in your profit, for example, move until here. Let's say maybe here price bounce from this level and hit your stop loss here, meaning that we still earn a big money from this area to this stop loss here. There quite a few bit from there. Okay, so this is how we trade with GMMA. So GMMA, if you are a swing trader, I think you can use this indicator. Okay. Okay, let's just go back to our chart here. Our thing. Okay, let's just cover easy identification of overall trend. We know the price go below the GMMA is on downtrend. Price go above is on uptrend. Okay, and identification on the overall trend. They said this is a reversal. So pull back here. Okay, reverse here and then continue, and now ranging or consolidation here, because you can see the price is the GMA is just close or just sideways on the candle here. Okay, price action. How to implement and read it, I already tell you guys. Okay, the degree of separation, strong uptrend, really strong downtrend, because there is a gap or the big gap between short term and the long term moving averages. Okay, narrow separation or crossover trend is weak. You can see that, or wider separation is a really strong uptrend or downtrend. Okay, crossover is a bullish. We're gonna buy here. When close below is a bearish, we're gonna short from the level. We buy here, exit here, and then we short. Okay, which is just now I just show you guys. Okay, heavily intersection, lack of price trend, meaning just a sideways. Even it's sideways like that, either you buy, we buy here. Okay, price go to kind of this level. This is kind of identify decision level. Okay, and then you can see the price kind of like ranging. From ranging here, either you close your buy position and then we're gonna short from this level, because strong uptrend consolidation or sideways and then continue to fall, right? And then you can see that the green cross below, and then there's a gap here. Okay, we know that we're going to hold our sell position until here price kind of like, you know, go above here. Either you exit here, or you can see that there's a rejection here, and then there is a price action. You choose exit your sell position. Okay, from here, either or maybe of this kind of boom here. Okay, and we put our sell here. If like, you know, if you not close your sell position here, is from this one you might just earn a few dollar or few like dollar here. So just use your trailing stop loss when we use GMMA, or then you can lock in some profit. Okay, this is a long example of buy position. This is bullish here. We buy here, we hold, and then we exit over here. Okay, you can either exit here as well, but to me, or exit when the price is already has bearish engulfing, and then you can see the consecutive red candle here. So you should already know that we should exit the buy position. For the short example here, bearish. Okay, the green one short term close below the red one with the long term moving averages, and then you can see that there is a big gap here, really strong downtrend. Okay, we short and hold. Back here, pull back. Either you have another short position and then you hold, and either here, okay, I will exit my short position because it seems like they're going to like go above the red one. Okay, but then after they continue to go downtrend, either we exit here and either here, or you have another sell order here, because it seems like this resistance level and price action here. Okay, and then continue to downtrend. All right. Okay, this is a breakout from consolidation. Okay, when the line that the split, that mean here, we already know, I just mentioned it, very strong downtrend because there is a gap or subluation here. Okay, boom. Long-term pullback, I just mentioned this how so this how the trader use the this indicator. Okay, you can bookmark, but I think it's a good for the swing trader. Okay, you can see they're really strong downtrend. Definitely you're gonna hold gold, right? Because you have to look at dollar. Let's just look at dollar as well. You can see that it be strong uptrend as well here now, right? When they close at this one, they are just sideways here. Suddenly they break because of this candle, and then the green one, they close above the long-term moving averages, and then you're gonna buy right from this level, and then you're gonna hold until when? Hold until the green one close below. Okay, this is a head one time frame. What you can see here, look at the candle. This is a sideways or ranging or consolidation somewhere around here. Okay, over here, and the green one, which is the green color here, close below the long term, which is the red one, and then you're gonna hold your short position here and then continue here. We might, some of you guys might want to exit, like you see that, okay, should I, let's say one price go like that. Okay, you either some of you guys don't know how to trade just based on GMMA, you might exit the short position, but you might think that okay, seems like price is going to change from uptrend or downtrend to uptrend. But you to trade with other like technique, which is in this case, I identify this my kind of like resistance level, and then I make kind of like pull back. You see, okay, it seems like price already almost like overbought, right? And then you hold, and then you can see that I have a lot of rejection over here, and then either you short here, you short there, and then see the ranging here, you have another short position, another one, and then you can see the price cross below, and then you hold until exit here because strong downtrend, and then after that is suddenly sideways. Okay, whenever you see that the candle or the price sideways, should exit either buy or sell position. Okay, no need to hold until like the green one close above or close below the red one, because okay, you might from your, for example, like from you earn $100, it might become like $50. Okay. These are the dollar. What about its work in gold? Gold is very strong. You can see that gold in H1, this how in H4. I think in H1 you will see really clearly that from where starting to sideways at this level, right? Somewhere here, and then you can see that the line they like close to each other, and after that they kind of like go close above, which is somewhere here, right? And then you buy because you know that is our support level. A lot of rejection, price just sideways, continue to break here, like break this level, right? Like break here, okay, and then continue. You buy here, price pull back, you can have another buy. Either here you buy because over here we buy because this is our support level. It just pull back to your support level here, right? And then after that you buy, and then you hold, and then after that you can see that the line, the color, the red line, they're starting to kind of go far away from each other. You can see that the degree of the separation here, and then you can really know that this is very very strong uptrend, right? You can see the uptrend pull back at, they are acting as support level, support level, support level, and they are really have a big gap here. Okay, now they are pull back once. Okay, you can see that really strong uptrend up to here should exit the buy position here. Barely engulfing, closing already. There might be a divergence here. Okay, and then you should sell. Okay, for gold. This is very nice trade setup for gold. Okay, and falling. You should ask me go. I'm kind of like waiting to. I already shot go and close already. Okay, like just now, price kind of pull back here a little bit as like support level. Is they going to break here? So the target for gold, I'm looking around this level, which is the support level here for gold. I'm gonna, which is 2004, slightly 2004 to 23.95. They're gonna be my first support. Either you're gonna buy from that. Um, they have a 50% here. So basically, I'm gonna buy gold around this level. I buy because I buy again the trend. I did not follow the trend because it seemed like now selling gold already. So you're gonna buy here at about 23, 23.95 to 24,000. Okay, I will just buy here, and then my TP take profit is gonna be somewhere for scalping, or this is gonna be like TP1, meaning that if I'm gonna buy at 23.95 or 24,000 here, at least 100 pip or 200 pip, or at least for scalping 50 pip to 100 pip, you should close, or you telling stop off for gold, right? Because from here, I think there might be a people want to sell from that level. Target 2004. That for gold for the first support. Second support is gonna identify at this level. This is my second support, meaning that falling another almost 200 pip or 300 pip falling from first to second support. That will be 50 to 50 and 61.8% fib level. Okay, you can see that falling very nicely in gold, right? Very strong. This H4, okay, this will have a gap here, very strong downtrend. And then we gonna wait for the price to come to our support, and then we gonna buy from that level, which is the buy zone. Okay. You need to set your stop loss as well, because you probably really have really fall all the way to second support. Just put your stop loss. Okay. You just consider, okay, if you want to buy this level to buy, but if you where is the do I delete it? What did I do? Okay. Okay, this is the buy entries you consider, okay. But if you not confident, just trade, maybe just try the strategy, buy from here, put 0.01 at least, right? And try to trade on the real account, not the demo, because if you trade a demo, there is no emotion. Okay, at least you trade a real money, you can use like the iCent, or you can use like the dollar account, and then just put like 0.01. At least the real money, you will have the emotion involved. Because if you trade demo, you put 100 lot, you put like 1,000 lot, you earn 1 million, 2 million in a demo, you don't feel anything because there is no emotion involved. But if you trade with your own money, real money, and then there will be emotion, you will feel, they will feel like how the trading real trading work. So this is a buy entry for gold. Okay, still falling at least here. At least 2004, they're gonna be my first entry, and the next instead they're gonna be 23.95. So between this one, I'm gonna kind of layer, meaning that I will have like small lot size here. Okay, I don't put like 10 lot or like 5 lot at like 24,000 here. I will just have like smaller lot here for gold. Okay. Do you have any questions so far? I'll pause here for a while. Let me know if you have any question. Okay. That's all for the GMMA. Let we just package it together. Okay, for this USD, it is a picture that I took from here. Okay, here. Enter here, so you can enter here, enter here. I think I enter H1, which is here. Okay, you should enter from here or here, and then you can say close, and then you continue to buy, and then we exit when close over, which is the green close below. So shall we should we buy or sell the EURUSD based on H4 time frame? Okay, the target for EURUSD, which I'm looking at for the first support, are gonna be somewhere around this level. Okay, that will be let me just remove the what I wrote just now. You can use Fibonacci, okay, and then we can use the extension. Today is Friday already, so you already won some money today. I usually don't trade during the New York section. Okay, because my time zone, I'm based in Singapore. When the New York section is about 8:30 p.m. Okay, so by 8:30 p.m. usually I don't trade if I already hit my target for the day. Okay, so for the first support, I will identify here. So meaning I target at least over 4 to this level. Okay, or this is my like my kind of like intermediate resistance, meaning that if price break here, gonna pull back, am I gonna short from that level? And again, you can use correlation to trade as well. So USD is a negative correlation with DXY. This is either I identify my first support or sorry, let me see. I pick this gonna be my first support. This is my intermediate support. Let me see how many pip from this one to this one. 15 pip for scalping. I'll just put no man, just put at second support here. Extension, just remove it. Meaning that if price break here, okay, the target which is at the first support here, and then the second support gonna be there. Let's just reuse the. Okay, we have 38.2% fib level on second support. Now, let's say if you identify your first support here, if we want to buy now, can we buy now based on what we can see? It seems like we can buy. Okay, we can buy EURUSD now. But again, if you buy and then you need to know where you're going to put the stop loss, okay? Because this is really strong. The reason I want to buy here, see, I haven't clicked, I want to see first, okay? Like this one, I might identify my kind of like support. It seems like break below here, and then I identify, okay, this is another kind of like support level, but it seems like there is a wick and the body somewhere around here, meaning that I'm gonna buy now, and the price, my stop loss, I'm gonna put just slightly below this wick, because I'm not gonna put the first support here, because it hit my stop loss, my neck plan. I will see if price come to my first support here, which I identify here, and then I see the confirmation. I'm gonna have another buy entry right there. But if you have really big account, and then you either you buy now, you can put your stop loss below your first support, up to you. Because our lot size and account size is different, so you need to manage your lot size. So it seems like this is my buy zone. But let me see, this my M15, the rejection. What about M5? Okay, I'm gonna buy. I'm not gonna ask you to buy. This is your own risk. Okay, if you want to buy, up to you. I'm gonna buy EU. Okay, I just click buy EU, so you may consider. Just these are my buy zone. So when come to the zone, I just buy. Okay, if you want to follow, you want to try, you just put 0.01. That's all. Okay, because sometimes if you know how to identify the level, key level, and then price come to the zone, and sometimes you dare not to like enter or like have the order here. Okay, but I already put one. I will see that better. You bow for me, I already put my set my stop loss as well, just slightly below this week. Okay, let's just see. Okay. Maybe look at dollar. Dollar still can. Okay, for key level for the dollar. Okay, they are very strong. This this one could be the first resistance here. If they can break above this one, the next target that would be this first resistance. I think the second resistance they're gonna be somewhere here, which we just use. Now in this case, right, you can see that now this strong downtrend, and they are acting at the resistance level. Let's just say whether price can fall. from this level, meaning that if dollar is falling, EU GU gold will be rising. Okay, now it's approaching the resistance level, then EU somehow is at my support level. Okay, I will see whether they can bounce from this level. It's a H4. And GU still follow for GU, GBUSD, I'm not gonna buy now because that is not the level that I'm looking for. For the GBP, I will wait somewhere how is this level. If the price come, and then I might consider to buy. Okay. Because looking for sell GBUSD. Okay. This is how it look like in M5. I think I should be positive already. Let's just see, okay, whether it go out here. For scalping, you just maybe aim for 10, 15 pip, 20 pip for USD, and you may close the entry. And it's very nice. Okay, if you enter together with me, we already positive for the EURUSD. Okay, I'm already positive. So okay, the first when I enter, I just put my SL stop loss, but I did not put my TP. Because TP, I always put the last one, always put stop loss first. Okay, just go to another pair. For the USD chef, we already buy, like this is our buy zone, right? Price already rising and already hit the TP, which is the TP or take profit is at this level. It already TP and then falling. Meaning you ask me whether we're gonna shop from this level. No, because that is my, even though I identify my TP there, but the level that I'm looking for for sale, okay, that would be around this level. Because there is a very imbalance over here. There is a fair value gap somewhere around here. There will be slightly go below this. Either you sell at the 61.8% fifth level, meaning that you're gonna short from this level. We should see the confirmation somewhere around this level. It's gonna be my second resistance here. let's say you're gonna short here. I'm not gonna hold until here, okay? My TP, this is to be my first support for my TP1 or my first support here. And my second support I'll put at the multi-swing low here. Okay, I think price still can pull back more. Pull back more is oversold. It seems like the MACD is already closed, and then you can see the green one. So at least target somewhere here. Okay, we will see for the USD shelf. It's not the level for to to sell yet. Okay, USD shelf break everything. Okay, what you can see, let's say we short here for the GMMA based on indicator, we short because the green cross below, right? You can see that this very strong downtrend because there's a big gap here, right? And now price come to this one, we should exit the sale position and then we should buy. That should have divergence as well. There's no divergence, but over here, oversold, right? Here, oversold. Close above, the green one go above already. The histogram here, that's why we buy. And then the candle also close with the bear bullish engulfing candle as well. Should exit the sale and then you buy for the USD session. Again, USD JPY we buy, but we buy which you should close at the resistance level. Okay, because for all momentum it is still on downtrend for USD JPY. Okay, the level here, this is my resistance level. We short here, I think I get 20 pip. I already closed. Okay, so if you were to ask me, I'm gonna sell again or no, because even though it's still falling all the way there or below, but it's okay because we can earn every day. Okay, you just set your target. You want to earn like how much you want per day, or this pair you set for 15 pip or 20 pip, and then it TP, and then you just close your computer and we can do other own thing, do other thing. Okay, because trading is just a part of your life, right? It's not everything, so we also have other thing to do. But some people, they have a mindset like if they earn 1,000, and then they think that okay, I think we should earn more, maybe like should today I want to 2,000, or you want like 3,000, but actually your target is like 1,000 per day. And then what if like today is not your day, instead of you already earn 1k and then you giddy, you want another 1k, but you lose. Okay, you lose your profit and then you also lose your capital. So just set the target. Or you can have like multiple account, meaning that like at least 2 to 3 account. And maybe I will share with you guys, you should have like 2 to 3 account, one for swing, one for scalping, and one for new trading. Okay, let's say this account already hit the target, then if you still want to trade, you should trade another account. Okay, this is my first resistance here, and my support right here. Second support. You can see that it's acting at the resistance level. Okay, that would be 61.8%. So this is the level, but I'm not gonna short here because um let me just see. Because I already happy with today. These are the key level. Okay, you may consider you want to short. Because I already have, just now I opened the buy position here for the EURUSD with you guys just now. I still hold, and then it's green. Okay. If you're happy with the scalping, you may just close. Okay, but I still hold a little bit more, and then I might close as well, because after this I got going home, so already happy with the profit. Or you're gonna buy here, but of course this is gonna be my resistance level, meaning that if you're gonna hold is your TP at your first resistance, meaning that for me I'm gonna short. Okay, if price go there, go all the way here, like go all the way here, I'm gonna short. Okay, all right guys, do you have any questions so far? Where is the... Okay, I'm going along the poll. Can you guys help me vote? Okay, to improve our webinars. Okay, and I will see you guys again. Me and my team will see you guys again, I think next week, because we will see you guys every Wednesday and Thursday. Okay, it's in the poll. Okay, guys. So that's all for today, guys. Thank you so much for your time. See you guys again in the next webinars. Just take care and have a good weekend. All right. Bye, guys.